Hey traders, this is Ron Haydat, Market Tamer. Happy Tuesday. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk and specific financial issues. Should always be addressed to your financial advisor. We'll kick off here with the S&P 500 up just a little bit today, a whopping 15 cents. The Qs were down in part to Google. They lost 0.77%, 1.48, but as you can see, the Qs are well above their 20-day EMA. Bulls still get the edge. Here is Apple. Now, it was lowered today by 4 p.m. Eastern by almost 2%, about $4. However, after market, the company is out with the latest report, closed around 200. Now we're trading at 210. So we're about $10, about 5%. 210 puts it at new post-December lows, highs. So this was December low. This is the newest high. The all-time high still up there around 230. But ever since we got above that 50-day on that earnings report back in January, it's been pretty much straight up. So right now they're responding positive to Apple. I would still consider to use the red line as an end-of-day trailing stop like I do talk about a lot of stocks, and that is that guy right there. So again, we're going to be opening up, if it stands after market, right around that 210 area. Some other stocks to watch here are MHK, which is Mohawk. This stock has been, a pretty good downtrend. If I go back 2 years, you can see it was up around 280, then it's down around 110. That's a haircut. But when I zoom in really close here, we see a hammer type candle. It dipped down to previous support levels and it was quickly bought up. And that was on the heels of this most recent report, according to Thinkorswim on 425. Now we're starting to see a spike in volume today, and it just cleared the previous high. So if I zoom in again, you can see how it cleared there. Once it starts getting above 140 and the 200-day moving average, I realize right now it's about $14 away or so. But that's what it would need to turn this chart bullish on the daily. So that 200-day is going to be a big deal. As the days pass here, it's going to keep inching its way lower. We take out this high plus the 200-day, that would be a bullish reversal on the charts. Here is BG, another stock to keep an eye on. They have earnings, as you can see on 5/8, still about 8 days away. But this stock was as high as 80 if you think back to 18, but I like the hammer here. Check that hammer out below support, and now we're getting volume coming in. With his earnings report, it seems like the shorts are either covering ahead of earnings or maybe there's some expected good news. But once we get through earnings, if it can clear out these highs right in here, ballpark that around 54, there's resistance at 60, maybe then up there towards 67.50, another potential turnaround play. Here is OII, Oceans Engineering. This one, if you see there, it had earnings on 4/29, which was Friday night, or Monday night, sorry, yesterday. Stock gaps up, closes higher today. It's right at the 200-day. Because the 200-day is right there, and there was this little bear flag resistance around the same area, once the 200-day falls, then 25 up to 28 would be the target. And that's, as much as 30, 25% higher. That's a big deal. And how about Weight Watchers? Stock was around 100 less than a year ago. Now it's at 20. Full-fledged discount, right? It's losing the wrong kind of weight. Stock value loss. But today there was a pop. Look at the earnings report. It's due out on May 2nd. Again, maybe some short covering, maybe some potential news they're expecting to be good. But if it gets above the 50-day in orange, something this little turkey has not done since pretty much getting below it back in August, July, that would be a sign of a trend change occurring. Now, hopefully, if the company comes out with earnings, it doesn't go from here all the way up here, and then, a big chunk of this move is already gone. But if we get a close above the 50-day post-earnings, gap fill the 30s the target, then up here, mid-40s would be the target, which is right around the 200-day moving average. And here is Seagate. This is a stock that was on a nice little rally January, February, March, but then we had a gap down ahead of the earnings report, which was 4:30, which was this morning. So you get a gap down in front of the report, post-earnings gap up. This could be an island type reversal pattern. What I would consider doing now is using today's end of day, or not end of day, but today's intraday low at 46.07. Intraday low at 46.07, say $46, as the potential stop, and the upside targets, well, most immediately around 51, but then back up here in the mid to upper 50s, 56, 57, somewhere up there. This looks like a U-turn on STX. Got to watch when you have gap downs and then gap ups and there's unfilled territory. Those are signs of a potential major reversal, or whatever trend was occurring, in this case down, is now considered over. All right, so I hope you find this helpful. We'll see what happens with Apple tomorrow. It is moving up after hours, and I'll see you in the next video there. Have a great day, folks. Bye-bye.